All right, Ren. So let's move on. As you said at the top, you're suffering from whiplash.
Yes.
It's good to have a bit of a watch list, though, for moments like this where you sit back and you go, damn, I missed it. I missed the 7% fall.
Yeah.
But having a watch list on the side of quality companies where if you are paying attention and you do have the time and a bit of cash on the side, you can quickly make a decision and get in and buy some of these quality stocks.
Yeah, I also think like when the market could fall further. Like
Yeah,
there's a lot of reasons that the market would fall. Like, you know, there's probably a recession incoming. Rates might not be cut as quickly as we think. Like the consumer is clearly struggling. So this is not just, you know, we still could be in it. We still could be in it. Yeah. And so this segment was inspired by an AFR article.
Yes.
Where they spoke to, I think, 6 fundies and built a list of companies they would buy in another stock market route. Even that terminology, another route. It's like, guys, it fell like 5%. Let's just calm down. But we wanted to talk about their list.
Yeah.
And then add a few of our own.
Yes.
Yeah.
All right. So some of the major stocks that got a mention, and remember, we're looking here for quality companies. CSL was the first one. Netwealth, ProMedicus, Heiko, which I hadn't heard of before.
Yeah, it's replacement parts for aircraft engines.
Oh, right.
Yeah, but I don't think
Not
it's
listed in ASX.
I don't think it's Australian.
Yeah. There was a call out for just generally well-placed REITs, real estate investment trusts, generally bank stocks as well, picking up them when they have a bit of a fall. And then a fundy called Chris Haynes came in and literally named 19 companies.
Just dumped his whole portfolio. All right, hit us with the list.
So he put in BHP, Brambles, Car Group, Cochlear, CSL again, Fisher & Paykel, Goodman Group, Hub24, James Hardie, Lavissa, Megaport, Netwealth again, ProMedicus again, Cube, REA, Technology One, Webjet, WiseTech, and Xero.
Honestly, if that was your portfolio of Australian stocks, like you'd be pretty happy with that.
No banks in there.
No banks, one minor.
Very few. Yes.
A lot of growth names. But look, I think if you think about that list that you've just ripped through, the takeaways, and you've kind of mentioned it there, but it's almost like a who's who of quality Australian names.
Yeah.
There are some missing, but not a lot. And I think that's kind of the point of this list and the exercise that we're doing here, which is there's a universe of quality companies that are sort of always selling at a premium. And the biggest opportunity when the market falls is to pick up or add to those, or like add to your holdings of those quality names at a decent price. Like obviously the opportunity is just to get into the market, but like in theory, getting those super high quality companies at a good price should give you above average returns.
Yeah.
And so that's the list that you want to build, and sort of that's the some of the names that we've gone through here. But the question, Bryce, is what are the names that we want to add to that list? So do you want to kick it off?
The only one that came to mind that I've got a couple of others, but we'll wait till the end. But the first one that came to mind was Macquarie for me, a company I love in my portfolio. It dropped about 7%. It's not expensive relative to market. It's PE of 22, so pretty in line with broad ASX as well. And it's just actually come off an all-time high. It's actually up 10% year to date, so it's outperforming the ASX at the moment. So yeah, one that wasn't in there and that definitely is on my list. Similar to CSL, anytime Macquarie goes below 200, they say it's a good opportunity to get in. So I think it's at 204 at the moment.
Okay.
So yeah, Macquarie one for me.
Nice.
What about you?
So one that has certainly captured attention recently, and it has actually fallen recently, but Audinate is an interesting one that I think is worth keeping an eye on. I also think some of the players in like quite hot spaces, so like obviously data centers is a really hot space. Goodman Group are building them. They're in there. But I also think Macquarie Telecom would be another one that is an interesting one playing in a hot space.
Nice.
Yeah.
I have two more to add. Not expensive per se, but definitely quality and meaningfully down. So this is beyond just the little dip that we've had.
Okay.
So Mineral Resources,
Yep.
a company that has been spoken about time and time again on the show. is actually down 43% from its most recent high,
Okay.
trading at a 25 PE. And LVMH,
Okay.
down 26%
We
since
almost
March.
managed to do all Australian stocks.
I
but-
know. Well, I was then just looking around and thinking, because some of these are on my list of like companies to look, quality
Yeah,
companies.
yeah.
And again, companies that you can pick up. And you can understand why LVMH is down. But well, I think just what's going on with pressures on consumers at the moment, like their businesses aren't performing as well.
But the weird thing is, like,
High end
inequality is getting higher.
Yeah,
But
yeah.
all the luxury.
I think short term here, like I'm interested in that. Like it's pretty significantly down.
Yeah, massively. Yeah. So there's a few of these companies that we've spoken about a lot on the podcast before. Cochlear we spoke about recently when we were speaking about moats. CSL we've spoken about. Brambles actually we spoke about recently with moats as well. Shep Pallets. WiseTech, Zero we've spoken about. But a sort of sector that we haven't spoken about is this wealth platform sector.
Yes.
And so Chris Haynes in his list had Hub24 and Netwealth.
Yep.
Damon Callahan also mentioned Netwealth in this AFR article.
And just for those that have joined the show, these are companies that run platforms that financial advisors and SMSFs and whatnot can use as their broker.
Essentially,
Brokerage platform.
Yeah. It's like an all-in-one brokerage platform where you can get listed stuff, unlisted stuff. Unfortunately, it's hard for us as unadvised customers to access. But that's a whole other conversation.
Yeah.
But it just reminded me of how crazy Netwealth's financials are.
Yeah.
So I just wanted to pull them out and share them because it is pretty amazing.
Yeah.
So Netwealth is not cheap.
No.
Trading at a 71 price to earnings at the moment. Revenue of 207 million, up 21% year on year. Now, revenue has grown double-digit percentages every year since 2016. So it's growing. Gross margin of 64% and a profit of 67 million, which gives it a net profit margin of 31%. Now, those percentages might not mean much in isolation, so let me put them in context for you.
Okay.
That is a better gross and net margin than Alphabet, aka Google, who have a 57% gross margin and a 24% net margin.
Nice.
So Netwealth is pumping out
So we've got the
double-digit
next
growth and has better profit margins than one of the best tech companies we've seen.
And its performance, so last year to date, up 41%.
Yeah, and look, it's not just Netwealth; it's Hub24. I think I haven't had a good look at Premium, but I'm sure they have similar numbers.
Hub24 is up 35% year to date. What's driving this? They're just getting more AUM.
So yeah,
activity.
it's like they've just got crazy
more
operating leverage.
Yeah.
In the sense that they've built this platform, they add more advisors who add more funds under management.
Yeah.
They've got structural inflows because of the superannuation industry.
Yeah.
So as people get paid and as more money flows, money just constantly flowing onto the platform.
Yeah.
But then they've also got this disruption theme, which is maybe slowing down a little bit, but Netwealth, Hub, and Premium really disrupted the last generation of wealth players
old school.
BT,
Yeah.
AMP, Macquarie,
Yeah.
and they're fighting back a bit, but so they were like taking market share. They had this structural just inflows, and then they had good operating leverage.
Nice.
So anyway, they're very
them on the
interesting
watch list.
businesses. Yeah.
Yes,
I guess the question is like how big can you be? You're kind of constrained to Australia, but like we've seen plenty of really good tech adjacent businesses do well just in Australia. Car sales, REA, they're trying to push overseas now.
I mean, when you're pumping out growth like this domestically, like there's no reason to need to look overseas at the moment.
Yeah,
like,
when super just keeps pumping double digit. Yeah,
There's
you're
no
right.
need.
Yeah.
Nice. Well, a couple of companies there to add to your watch list. And I guess we encourage you to make your own so that when there is another horror market rout,
Yeah.
you've got some stocks on the sideline.
Equity line.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.